so that's why you have less and less buyers for US Treasuries, and that's why the rate's basically going up. And as I mentioned, Tether, Circle, these stable coins might be one way, but is this enough? Questionable. So that will be the interesting part, right? When the Fed wants the interest rates to be lower, and the long-term rates are not following them, and that basically means the Fed has lost control over the markets, and then all sorts of bad scenarios are potentially possible. So and for that case, obviously, you want to own physical gold and silver.
You're watching Capital Cosm. My name is Danny, and today's guest is Florian Grummes. Florian, thank you so much for coming on.
Danny, thanks for having me again. A pleasure.
Yeah, likewise. Let's go ahead and dive right in, Florian. I'm looking at the markets here. What is your macro view of the markets at the moment? What is top of the radar for you right now?
Well, so far, I think more or less it's playing out as expected from my side. So we're seeing this melt up basically in everything. Stock markets making new highs. Even the German DAX index is making a new all-time high, first time above 20,000 points as of today. It doesn't matter that the economy in Germany is in a recession. The market is pumping higher. It's driven by liquidity and massive money flows. And that's what was expected from my side. And yeah, we see Bitcoin also hovering slightly below the 100K. I think it's also just a question of time until we take out this round psychological number. Many of the altcoins have actually placed nice rallies over the last few days and weeks. And the precious metals are consolidating, but in a bullish fashion, I would say. So probably gold will join the party soon again as well. So I think in the short term until the end of the year, very likely markets will move higher. Yes, with volatility and maybe some little pullbacks here and there. But overall, I guess we're going to see new highs even in all the markets I just talked about. And then we have to see first quarter next year. I mean, usually you have these stock market rallies often lasting into May, early end of May, maybe even into June. So don't want to be too bearish here with the start of next year. But overall, I think, yeah, the stock market had a heck of a rally over the last 2 years. And so it will be prudent to also expect a pullback at least at some point. But right now, I don't see it. I'm going to be year, but for now I'm bullish on the stock markets, on crypto, and on precious metals.
What's driving this bullishness, do you think?
Well, I mean, it's been the liquidity expansion that has happened over the last 1.5 years, and that still is continuing. You see more and more central banks constantly basically increasing the money supply. We've seen massive fiscal stimulus, and that's what's happening right now. Still, of course, there's a psychological aspect to it. I mean, it's a year-end rally, usually October to early May. It's a very good time for the markets. And then it becomes a self-fulfilling kind of trend and prophecy. And yeah, I mean, everybody knows in 9 out of 10 years, there's a massive year-end rally. So people just start buying. And that's, I think, what's going on right now. Of course, I think the election of Donald Trump is perceived as rather business friendly and bullish for the stock markets especially, and also for crypto. And so that's driving the markets right now. I don't see any black swan around the corner right now. Yes, there's lots of reasons or potential risks out there. But as I said already, I think until the end of the year or early next year, and then we have to reassess.
Interesting. What about tax loss selling? Don't you typically see that as well at the end of the year?
You do, but you do if during the year there has been actually some sharp corrections or even maybe really big pullbacks. And I mean, you do a tax loss selling in November, early December, because you have positions that are underwater, right? But look, I mean, most of the things went up it's actually hard to have losses in your portfolio. I mean, the stock market is up, gold, silver are up. Most of the mining stocks are at least a little bit up. Some of them are massively up. Crypto, the same. Bitcoin making new all-time highs. I mean, most of the things are definitely in plus, and I think there's no reason for a tax loss selling here this year.
Okay. Well, where do you see gold and silver going from here? It appears that their rally has kind of been put on a pause ever since the win behind Donald Trump. But you've kind of alluded to the fact that they just might be consolidating and getting ready for another leg up. Can you expand on that?
Right. So I wrote a piece a week before Donald Trump's election, and I said most likely if he wins, and it was already obvious that he would win, most likely we would see some profit taking in the gold market and this kind of like a war premium coming out of it. Because, I mean, the rally in gold has been massive over the last 2 years. It started at the triple low at 1615 in October, November 2022. And here we are. I mean, it rallied nearly $1,200 over the past 2 years. And a large part of it, I think, has been also driven by geopolitics. And so once it became clear that Donald Trump would be the next president, gold started that pullback. And it was due. I mean, it was very overbought, overheated. So it pulled back from 2,790 down to 2,535 within 2 weeks. Very sharp.
Right.
Violent pullback. But here we are. We're trading around 2,650, so more than $120 higher than that low. And market seems to be stable, holding above the $2,600 level. So I wrote about most likely we will get some form of a triangle consolidation. That seems what is playing out here. And within an uptrend, so that's a bullish formation. So I expect at some point over the next few weeks, maybe latest in January, but could happen earlier as well. The gold will break out above these resistance between 2,670 and 2,700. Then there's another one at 2,750. But I think overall, it's just a multi-week consolidation, a healthy breather, and most likely gold will continue towards 3,000, 3,100, and maybe even higher into spring. So that's the main assumption that I have right now, the main thesis. It's a healthy pullback, and it seems like we've seen the low already at 2,535, maybe another dip towards into slightly below 2,600 possible, but that would be already a buying opportunity again. And what I especially like here is that silver is showing up nicely, starting to outperform gold. So we had a double low, slightly below $30. This psychological level has held overall, and we're seeing it moving up now. We're seeing the silver mining stocks breaking above an important downtrend line. And my expectation is that silver might now, or over the next few weeks, take the lead into spring. And I think there is a very good chance that it can rally up to maybe $50, let's say by February, March, April, May, something like this. So I don't think the rally is over in precious metals. I think it's a healthy breather, and I think we're seeing now being a base being built for the next leg higher. And in that leg higher, probably silver will really show up to the party.
Why would we see a leg higher? Is there any underlying risk in the system that you see? For example, gold going from 2,000 to 2,800, and many people often cite the fact that it's Eastern Central Bank buying. Does that continue moving forward? As well as the war premium that seems to have been stripped out, it appears to be being put back in with a number of new conflicts on the horizon, right? The stuff going on in Syria, potential conflict maybe in the Koreas and so forth. What do you think about that, about a war premium being removed, and is it going to be placed back in?
Yeah, you made an important point, and I forgot to basically talk about the fact that it first got priced out, and then, of course, a week or 2 weeks later, with the Americans allowing long-range missiles against Russia being used by the Ukrainians, basically gold immediately within a week priced in. It rallied from 2,535 to 2,720 within like 6 days. So that was like $160, $170 rally. And that, as you rightly said, I mean, the war premium got priced in again very quickly. And we have to see how this all plays out. It looks like the Biden administration wants to create as much as a mess as possible and make it as difficult as possible for Donald Trump to maybe start some peace talks. I think they ship as many weapons as possible during the next few weeks to and into Ukraine. And you also mentioned some of the other geopolitical hotspots showing up. So yes, that can and will drive gold higher again. And of course, we have ongoing central bank buying, especially from Eastern central banks. We have physical demand out of India and China still being strong. We briefly talked about the fact that a large part, at least 50-60% now of the international gold trade is going through Dubai. So things are shifting away from the paper gold markets in the West, which have dominated the price finding of the last 50 years, basically. And yeah, we can see that these paper shenanigans at the COMEX and LBMA are not able to suppress prices as they were able in the past, So this is simply changing. And if there's not enough gold physically, then it will be difficult to suppress prices. If in other parts of the world people are trading physically, as in Dubai, as in Shanghai, as in Mumbai. So that's what's happening. And it's a process that is not leading to a gold price explosion overnight, but it's something that we now see over the last 2 years. And I don't think that this trend is over. I'm very sure that the market wants to see $3,000 as well. Most of the Western world has not really participated in that whole gold rally, which is also a reason why many of the mining stocks are lagging or have not done that well. But overall, yeah, I mean, many central bankers also in the West print and push money into the markets. The liquidity is there, the money flow is there. So that's what it is right now. I understand, and I mentioned it before, but the example of Germany, you have recession, you have massive problems in the economy, yet stock markets making new all-time highs. It doesn't really make sense. But then again, if you take the cracker boom theory, that's exactly what is supposed to be happening. If you, on the one hand, you're devaluating the currency by constantly creating more of it, and on the other hand, basically diminishing or shrinking the confidence of the people because they're seeing you can buy less and less with your money. So you have to escape into hard assets, and obviously stocks, precious metals, Bitcoin, and real estate are those hard assets.
Does it appear like the West is somewhat conceded to the East when it comes to gold buying? You see this with the upcoming Trump administration, where they've talked about a Bitcoin reserve and the fact that they're going to be leveraging Tether's ability to link to the U.S. Treasury market to kind of uphold the debt that way. Could it be that the U.S. is effectively, and potentially even Europe and the rest of the West, could they be heading more towards a Bitcoin dollar as opposed to the East, which seems to be the ones accumulating the gold?
Yeah, it's a very good point, Danny. I mean, I thought initially that Donald Trump just out of opportunistic reasons decided to embrace the crypto world and get their votes as well. But at the same time, it is also clear that Tether, for example, and Circle, so the stable coins, are the largest buyer of the US debt, right? I mean, those are the ones that are still buying US treasuries. So it's a way to basically get this pressure out of this constant money printing into, or channel a part of it at least, excess liquidity into the crypto world. And I used to be a big fan of Bitcoin. I'm not as idealistic anymore as I used to be, but it might be that is part of the plan. If the Americans come up with a Bitcoin national reserve, other countries might have to follow, while the Eastern world clearly is more in favor of the physical gold. It's going to be very interesting how this all plays out. I have no crystal ball and cannot really tell you the end outcome out of this, but it's a very interesting one. Fact is, most of the central banks are continuing to buy gold. And the Americans would be the first one, I think. Okay, there's like 2 or 3 little exotic countries that hold some Bitcoin, but generally speaking, the Americans would be the first one. We've seen a massive success of MicroStrategy when they basically changed their approach, and the company now is basically a Bitcoin proxy, even with the leverage. Actually pretty smart how Michael Saylor has built the whole thing. Let's see. It's going to be exciting. I mean, I personally believe that this tech world can and will coexist along with the old traditional material world of gold and silver. So that's been always my recommendation, that they complement each other. So you want to have gold and silver physically, as well as approach a part of your money in Bitcoin. I don't know if they can coexist on a national geopolitical kind of level. We have to see. It's very exciting. I mean, there obviously has to be made the statement that this team that Donald Trump has put together, I think if there is one team that could save America, it probably would be his team this time. I think he has learned some lessons from his first term. And I mean, having a smart guy like Elon Musk on board, a very disruptive guy. I mean, if a team could change all the problems or attack and maybe solve at least partially all these problems in the US, it would probably be his team now. So it's going to be very interesting. I mean, China and Russia, they also have big problems. Let's see. It's very exciting. I think we're living in historic times here.
Yeah, definitely. What would be the Trump trade for the next 4 years, do you think? What themes would be prevailing from an investment standpoint?
That's a good question. I thought that infrastructure would probably do really well. I think that's maybe not initially, but rather quickly he will realize that this is a way where he can support America. I mean, massive investments into the infrastructure, and that's where also to play. So if he really wants to keep up and bring America into the future, massive amounts of copper will be needed, massive amounts of silver will be needed. So that's probably part of the Trump trade, yeah. I mean, he will devaluate most likely the dollar. So I think gold will do really well under him as well. It could be that everything moves up can just continue, yeah, even if many people having a hard time getting their head around it, and it's against many things that we've seen over the last 5 decades. It could be that this just continues overall, high volatility, but overall markets just marching higher because liquidity is there, more money printing, maybe they lower interest rates again. I mean, that's the expectation for next year. So let's see if he finds a way that Tether and Circle and the crypto world basically continues to buy the US debt, so that the interest rates for the long-term debt is not going up too much. Yeah, that might be a way forward.
Interesting. What does that mean for inflation, though? If he is going to go this high growth route, easy money route, what can we expect in terms of inflation in the next 4 years?
Most likely we will see a scenario a little bit similar like the 70s, which would mean another leg of inflation up. So that's most likely. And we're seeing this already, that some of the latest inflation numbers are moving up again. So that's probably the expectation. And the big question will be if the bond market demands higher interest rates for the debt because of high inflation, and at the same time, central bankers in the West, in Europe especially, but also in America, need and want to lower interest rates to keep to stabilize and the economy. that will be the interesting question, right? And we've seen this over the last 2-3 years that the bond market, to a certain extent at least, has dictated what Mr. Powell was able to do. So it's going to be very interesting how this all plays out. Of course, there's always the chance for a black swan as well, and we also have to be aware there's certainly a lot of powerful people in the US who would love to see Donald Trump having huge problems and would love to see a stock market crash during his second term. There is a lot of potential scenarios on the table. So that's why I said before, I think people need to understand we have to reassess constantly nowadays. It's very difficult to make a statement what's going to happen in the next 1, 2, 3, 4 years. Also, by the way, with AI and robotics and all this stuff, I think it's not even possible to think ahead further than 5 years. The speed of
you have to be agile.
Changing, and it's so crazy. I mean, who knows where we are in 2 years, right? So again, I think we have to take it step by step. For the next let's say, a few weeks, maybe the next few months, it looks pretty promising, pretty good. Everything is more or less stable. And then we have to reassess. I think that's the only way right now. Long-term buy and hold has become an approach which is very challenging.
Hey guys, quick pause. I won't take too much of your time, but if you're looking to add into your gold and silver stack, please consider Miles Franklin. More specifically, email them, info@milesfranklin.com, and tell them that Capital Cosmos sent you in the subject line to unlock special pricing that you won't find on the website. In the unlikely event that you don't like the prices, you could always not buy. There's no commitment necessary, but I do recommend Miles Franklin for a number of reasons. The customer support is top-notch, the prices are great, and I know the people there. Great people all around. So with all that said, let's get back to the video. Thanks, guys. I see. Well, going back to your bonds comment, I'm looking at the 10-year now. It's at 4.225. Obviously, not keeping track with the Fed funds rate. So it appears that what you've kind of laid out is already actually happening with the bond market, no?
Right. So that will be the
So it seems like the bond market's already kind of smelling out inflation down the line. Is that the case or no?
Yeah, it is. Part is probably the inflation, and it's just simply. I mean, why is the rate going up? It just means there's not enough people buying these bonds, right? So the buyers that are left demanding a better rate, a better interest rate for their bonds. That's what it is. So that is the challenge. If the rest of the world decides not to support US debt anymore, then you might see these 10-year rates going higher and higher, because obviously, as we all know, a large part of these US debt has been bought by foreign central banks, foreign investors, foreign institutional money. And due to these geopolitical tensions, due to also more and more questionable debt ratings. I mean, will the US be able to pay back all this debt, right? I mean, that's obviously a question that many of these investors ask themselves nowadays, combined with this geopolitical situation. Yeah, so that's why you have less and less buyers for US treasuries, and that's why the rate's basically going up. And as I mentioned, Tether, Circle, these stable coins might be one way, but is this enough? Questionable. So that will be the interesting part, right? When the Fed wants the interest rates to be lower and the long-term rates are not following them. And that basically means the Fed has lost control over the markets, and then all sorts of bad scenarios are potentially possible. So and for that case, obviously, you want to own physical gold and silver, because I believe in that situation, it's the best investment. Let's see. It's going to be interesting. I mean, I've made the point numerous times over the last 3-4 months. I always reminded people, 18th of September this year, the Fed started to lower interest rates by 50 basis points, and they did exactly the same in September 2007, on the same date, 18th of September 2007. And back then nobody could see the financial crisis being actually directly around the corner waiting for us. So potentially it's possible. We will have to see, and we know there is enough dead bodies somewhere lying in the cellars of all these big institutional commercial banks, right? The commercial real estate. I mean, all these problems have not been solved. So it doesn't take much to create a whole nightmare here. But in the short term, I think it's still reasonable to be bullish.
Yeah, you do see all of this bullishness around lately, but who could probably be argued as the greatest investor living today, Warren Buffett, he has a record high 30% cash holding right now. Why do you think that is? Why is, I mean, I'm not saying that you know Warren Buffett or anything, but if you were to speculate as to why he would have such a high cash holding right now, what would be the case?
Yeah, I think for many of the reasons that I just mentioned, and obviously also because, I mean, the air is getting thin here. The stock market had a heck of a rally. I mean, just very recently, we heard that, for example, Supermicro, the accounting company, Ernst Young, didn't want it to continue working with them. Super, I think, the third largest client of Nvidia. And we've seen these stories circling around already since 1.5 years. The mainstream media never paid attention to it, but these problems are there. And if we find out that maybe a certain part of the revenues of the mega AI darling Nvidia are actually not really there, things could turn around very quickly. And I think a guy like Buffett very clearly sees these issues. And he needs time, like he's not a guy he can move out of his position in one afternoon. Obviously, this takes a long time. He's a big ship that is maneuvering, and it takes obviously 2-3 quarters until he's basically brought a certain part of his investments into a cash liquidity position. So I think he see that the valuations are completely insane in many ways, and it's very unhealthy, and everything is there to call this a bubble. I mean, that's obviously a fact, but we also know that often markets run further than most people can imagine, and then they fall lower than most people can also imagine. So that's always the tricky part of it. And a guy like Buffett, he needs 2-3 quarters to basically maneuver his big ship. So I think he sees it coming, and we have to be prepared for it. So that's why I've continuously said, like, let's see how next year plays out. Best case, maybe this rally can last into spring, early summer, but I would be getting step by step more skeptic and more cautious.
Interesting. So do you anticipate, if we do see inflation, do you anticipate it from the demand side or the supply side this time around?
Well, I mean, this whole inflation story has been driven by the supply side, in my opinion. So you had supply shocks during the lockdowns and COVID, right? Then you had supply shocks due to geopolitical events, and basically the end of globalization and this competition between America and China and the war in Ukraine and Russia. So I think that will continue. And these supply shocks, I mean, we just heard that China will not ship certain critical metals anymore to America. So this is the kind of stuff that creates supply shocks in the future. And I think Western politicians have been asleep most of the time the last few years, not understanding that China is basically getting control of most parts of Africa. Now they are also in South America. All these big copper resources are now basically controlled by Chinese. And we have to see, but I think it's going to be more and more supply shocks coming, and not demand shocks, because generally speaking, the demand in the Western world is rather weak. And the same is true for China and for Russia. The only really strong powerhouse, I would say, over the next few years is most likely India, because you have a young population, a growing young population that wants to have a fridge, a car, that wants to improve their life, working hard, tech savvy. But most of the Western world is saturated at best. Many people have challenges to actually make a living or make ends meet at the end of the month. So I think it will be supply shocks that will create more inflation.
What about the easy money? Will that create any inflation from the demand side, though?
I mean, it's of course it's not, nothing here is just black and white, right? Of
Right.
course, we have to understand that this inflationary mindset now is basically active all over the world. So inflationary mindset means if you need to buy, let's say, a new furniture, you know it's better to buy it now than to wait a year or two because most likely prices will have gone up in the meantime.
Mm-hmm.
If you are a little service provider or run your own company, you will not be willing and able to lower your prices anymore. Instead, you're constantly being pressured into raise your own prices as well because your suppliers, the people that work for you, the materials, everything's going up. Health insurance, for example, is going up every year. So this inflationary mindset is there, and that means people are not willing to accept less anymore. Everybody's trying to raise their prices, and that pushes everyone else to raise their prices. And you have that kind of like psychology playing out. And of course, that is, if you want to call it demand side driven as well. But I think you will not be able to lower your prices anymore if everyone else is rising their prices, right? And so it's very unlikely that this changes anytime soon, unless we get a big crash or something.
Mm-hmm.
I think that's the only way to change that again.
How does the tariff policy that Trump wants to enact, how does that change the landscape? What are some of the impacts behind that?
I mean, again, it's inflationary in the end of the day. He tries to protect America, but what it really means is he makes the products that are coming to America, the parts that maybe are needed to assemble a machine, a car, whatever it is, he makes them more expensive. And it also means more fierce competition about markets, about what's available in terms of resources. And so it will most likely will also create more inflationary pressures. I'm totally against this part of his policies, by the way. I believe in free markets and I believe in competition, and that the strongest product or service should actually be able to be the winner. But unfortunately, that's not how politicians think. I don't think that it will help at all. We have to understand that this, with all the problems, but this was the good part of the globalization was this, many of the products for the end users became cheaper and cheaper because the whole world was in competition, and that was good for the people, right? If you turn this around now, all the end products will become more expensive, and you've seen this in Dubai recently. I mean, most of the electric cars now are from China, and the quality is actually pretty good. Germany used to be the car maker nation #1. I mean, our cars used to be the best. There's no chance anymore to compete with these Chinese cars. If Germany would introduce tariffs, we would destroy the remaining industry because nobody will be able to buy these cars anymore. And internationally, nobody will be interested in buying these cars. And a part of Germany's success used to be the exports. And the same is true for America. So I think Donald Trump will not help America by introducing tariffs, but what will be the end result is making everything more expensive for everybody, not only in America, but also internationally.
What about this claim of 100% tariffs on any BRICS countries that transact in a currency outside of the dollar? Is that realistic? And if so, what does that mean for the proposed BRICS currency that's supposed to be backed by either gold or like some basket of commodity? Does that put that currency in danger of existing?
No, it doesn't put it into danger. I mean, I think there is a little bit too much expectation anyway, especially among gold bucks with this BRICS nation. I think it's a rather complicated thing to get this really going. But again, a very complex kind of story or question here. Obviously, he's talking. Will he be able to like this? We have to see. I mean, the petrodollar is not what it used to be anymore. That used to be the strength of America. I doubt that he really will be able to fulfill here his big claim. I think this is more like big words, and I think he will not be able to follow with big actions. If you look at this kind of work, escalation is on the table, right? I mean, initially I thought that he might be willing to talk and look for deals with China and Russia, but if this is his approach, it will be actually very difficult. Probably
Well, it's a classic Trump tactic, though. He starts off by being very aggressive, and then he works it down. It's kind of like a negotiation tactic.
yeah, probably that's part of what he's doing here. So he's threatening, and then in the end, he's the nice uncle doing a deal with them, whatever. I don't know. We have to see. But I don't think that he will be able to challenge. I mean, you have to understand most of the business in the East is actually not really depending anymore on America. Yes, America has the deepest capital markets by far, but lots of things happening now without America as well. So it's going to be interesting how this all plays out. I assume this is going on and will drag on for years and maybe even decades until we really see a clear picture who has been the winner of this East-West kind of like competition. I don't expect something to change significantly overnight. I think it's going to be a long process.
I see. Well, it's been a pleasure having you on, Florian. Anything you want to talk about before we wrap up that we didn't get to?
Well, I mean, I just maybe want to emphasize again that I think that there is a very good opportunity now in the silver market. So I think that silver looks really good. It's been lagging compared to gold over the last 2 years. I mean, the rally itself is phenomenal in silver as well, but we haven't seen silver taking over the lead. We haven't seen silver really doing its own thing, and that also tells me that this rally is not over in the precious metals. And I would assume there's a pretty good chance that silver will see a nice, massive rally into spring next year, maybe up to $50. And that obviously would also trigger a nice rally in the silver stocks. So that's actually one of the sectors that seems to be still lagging, with a nice opportunity to catch up over the next few months.
I see. I see.
Yeah.
Well, Florian, tell people where they can find you.
Yeah, MidasTouch-consulting.com is my website. So we have daily, weekly, and monthly research. You can also subscribe to my Substack, where I send out a daily call on gold and silver. And we have a Telegram channel, a live channel with lots of investors from all over the world. Main focus is on precious metals, commodities, mining stocks, as well as on Bitcoin and crypto. It's free. Everybody can join. Telegram channel is called Midas Touch Consulting.
Excellent. We'll have that link down below, so be sure to check it out, guys. And if you enjoyed this video, give us a like and comment. Go, Florian, go in the comment section. If you disagreed with anything we had to say, let me know. I do read the comments. So let me know your disagreements as well in the comments section. And also subscribe to the channel to keep seeing more videos like this. It does help the channel a lot. It might not seem like it is, but it does help a lot. And finally, check us out on Substack, capitalcosm.substack.com, where you can get early access and ad-free versions of each and every one of my videos, along with a host of other perks. Be sure to check out the Substack. Link to that is down below in the description box, as well as the pinned comment. And with all that said, Florian, thank you for coming on. And guys, thank you for watching. We'll catch you next episode. Bye, y'all.
Thanks.